All right. I'm assuming, can folks hear me? I'm not really sure how this works. I've never done this. And it's supposed to be recording so we can upload it later. Let's see. I don't know if we do the like, can you guys talk, or you're choosing to be muted, or are you not able to talk, or can we use the voice text? All right. So we can just kind of record it for folks later. This is what my trading view looks like normally. So I'll have either the ES or SPY 5-minute BTC chart, high time frame BTC chart, and then the larger chart usually between 15-minute and 30-minute chart. I've got VWAPs and key time levels. This is an OBV indicator that automatically does the diversions, and then this is a momentum indicator. So the OBV is looking at volume, whereas the squeeze indicator is just looking at price and volatility. So you don't really want to have, there's like a million different indicators, and all I'm really focusing on is price and volume, and looking at those two things in as many different ways as possible. So when I look at a bigger chart, sometimes when I post the charts, I've got two sets of volume. So generally, when I look at this stuff, I'm looking at relative volume, which is kind of averaging out the volume for the different time frames, and it's giving me an idea of how much volume is different than that particular time in the past. So I changed the colors on this so it's easier to see, but essentially those green bars are when volume is 20% higher than that time previously over the last 30 days. And same thing with the red. and then I still have the same momentum indicator. It's just different colors. I like to use the Spaceman indicator. It basically is just giving me here like the weekly low, but you can set it up to a lot of different stuff. Monday high, Monday low, Monday mid. I use the VWAP indicator on most of my charts. I can add the profile. So this is a weekly profile. And you can kind of just shift it around and get an idea for where the volume and where the traders are actually participating. So, for example, if you see this big drop over here that we had, that wasn't sellers just constantly selling, that was just buyers not coming in. So you see these big wicks down, and it doesn't necessarily tell you where buyers and sellers are actually buying and selling. Because when you look at where the volume actually is, then you have a better idea of where people are going to buy back in, because people are going to tend to buy and sell at the same areas that they have in the past. So essentially, just looking at where people are interacting. Most of my charts that I post with the more simple volume, and this is just giving me like the volume for the area that's showing on the screen, and it'll just automatically adjust. And the lighter areas are outside of the 68%. So 68% of the value of the volume in this area that you're seeing on the screen happened between, 29.6 and 28.7. And then the red line is the highest, the most transacted price. The most amount of volume was at that price. Basically, the way I would start, and it's moving kind of slow, I think, because I'm recording it. But basically, I would start with a monthly chart. And essentially what I'm doing is looking for key levels, right? So you can start to see right away where some of these key areas are, right? So, that's a key level. This is a key level. This is obviously a key level. And you basically just kind of start at those higher time frames, and you start getting an idea of where people are. Like if you see a bunch of wicks in one area, like right here, this is obviously a very important area as well, because you've got a lot of buyers have stepped in here in the past, right? So that 28.7, 28.8, 28.9, if you go back to, last year, was a very heavily defended area. So the Bing app doesn't necessarily have as much volume transacted and as much history on it. So generally you would do this on like a Binance chart. But essentially, somewhere in here is the other key level. Right there. Right. So once you do that, you kind of move on to the weekly chart. And you kind of do the same thing, right? If you have levels that are important. I think on the weekly chart right now it's a little bit tough, because you're better off just sticking to the monthly. But obviously you can see like right here that 31.1 level lines up really well. And what I usually do is just change the colors on these so that they're easier to see. But you can start to see that you're really just kind of getting an idea of key levels. Some people use wicks, some people use candle open and closings. I kind of look at both just to see where price is going up and down and stalling, and getting an idea, like this level right here on the weekly. And like sometimes I draw this stuff out, and like 6 months will go by, and then all of a sudden we're at that level and I see it on my chart, and Bitcoin's going to react really, really well to these levels. And so SPY may not respond as well to these. You may have to go through and do fib levels. You can trade based on just about any theory, as long as you're consistent. What I'm doing is I'm looking at trying to figure out where buyers and sellers are going to interact. So high concentrations of volume. I'm looking at fib levels, daily levels, weekly levels, monthly levels. It doesn't matter if it's right or wrong. I'm just trying to figure out where those buyers and sellers are going to interact. So if I know that on SPY people are using fib levels, then I'm going to mark out those fib levels because I want to anticipate what these traders are thinking so that I can figure out if they're going to get caught offside. You can kind of see, I kind of talked about this a lot, but like you can see that white line that we just drew on the monthly level, and we didn't look at any of this stuff really. You can see that monthly level is being extremely well respected. We marked it off of a monthly level, like last year, and you can see that now it's been tapped almost to the penny, 4 times in the last, 2 weeks. So these levels become really, really important. Once I kind of get through organizing those levels, you can obviously see that Bitcoin is just consolidating here. It's in that range. I've got some other charts where I mark out the range, but you're always going to get these deviations up and down on a range. And so essentially what you're looking for on a range like this is to say, okay, if my range is here and here, what you're looking for to trade that breakout of the range is you're looking for Bitcoin to kind of see if I can draw it. So you're looking for this deviation down. Ideally what would happen is it would break down and then come up, retest it, reject, and then nuke. That's what the vast majority of people are doing, and anything outside of that becomes a much lower probability trade. So when you get these kind of deviations, essentially once that breakout happens, people are smashing the buy button, algos are smashing the buy button, and if there's enough sell orders up here or down here, then it's just going to retrace and it's going to burn all of those people that were late. So the safer entry is on that retest up, unless if you're just playing the range and you're always shorting here, you're taking profit here, and then you're leaving some open in case it just nukes, and then you have a starter position and you're a little bit safer. But for now, there's really not a whole lot of sense in taking a long term swing position on Bitcoin or any real crypto unless there's something outside of the norm, because we're in all likelihood just going to stay in this range until we really make a solid move outside of it. Some of the charts that I use aren't candlestick charts. So, like on some of my Bitcoin charts, like these candles are tick-based candles. So they're 30 tick candles and they're moving. I don't get a new candle until the price moves 30 ticks. So down here you can see like this candle's 5 minutes, this candle's 10 minutes. I've had candles go, 3-4 hours, and it really just depends on how much price is moving. I've got, large size orders. So this top row right here is giving me buys and sells, market buys and sells over 500 grand. And the lower one is 200 to 500 grand. And then this is giving me the delta for each candle. So for this particular candle, there's $4.9 million worth of market orders, and the delta is 538,000. And essentially what I'm looking for is, situations like this right here. You've got 15 million in negative delta, but a positive candle. That means that there's at least 20 million worth of buy orders at this previous weekly low. So we kind of got back to that level and it bounced right up without people actually hitting the buy now button, because all those sellers just started closing. And then you just kind of get this short little squeeze up, and then here all the buyers think that we're going to break out, and they all buy. Like this guy bought this is a $5 million entry, and he marketed in. So you can see right here, he didn't even get filled at the same price point. He's got like a $30 to $35 spread between his first fill and his last fill because he marketed in, and then it just immediately starts going against him. So he probably closed right here and then at a loss, and then it fucking went up on him. So you really want to avoid longing when the price is going up and shorting when the price is going down, especially when BTC is just ranging, because it really just has a habit of screwing whoever does the dumbest entry. Like this line is VWAP. This guy basically market longed into resistance, which is like the last thing you want to do. These lines, these green lines, are giving me those value areas. So 68% of the volume today is in between these two lines, and the bulk of the volume today is at this middle line. Kind of the same thing on this chart, but this is a 1 minute chart, and you can see I've got the value areas, and these things are pretty straightforward. You can see Bitcoin came down into value, went up to try and retest it and reject it, and we short that. I longed this, which I thought was going to be the squeeze, but you can see that it just didn't break up. It still could, because it's still above value, and it hasn't really broken market structure, so it could very well still squeeze up. But essentially what you're seeing is nobody's really willing to commit right now, so it's just kind of sitting here in this area. These are VWAPs, and they're split by orders. So the blue line is VWAP total, and the yellow line is VWAP on Bybit if you only consider orders over 250K. So you can see like big orders are buying higher than small orders currently. Some of the other lines are just more different time frame VWAPs. And then these are the DOMs for BitMEX and Bybit, and that's what's showing me the orders that are actually getting executed in the middle, the orders that are being placed on the books, and then any large orders come through kind of on the sides. I almost always have, like I said, either SPY or ES. I really like charting ES because I think the futures just trades a little bit more cleanly and has a little bit more flow and doesn't have such big gaps. But, if you're trading SPY, you want to be, just like I marked off all those points on the Bitcoin chart, you need to be marking out those gaps from closing and open, because there's just a really large tendency to kind of go back to those things. If you kind of look at, the problem with crypto is you have way too many exchanges. So if you're trading SPY, like, all the data is the same. Like, futures is regulated. You're going to get the same data if you're trading E-mini, regardless of what exchange you're using. Whereas Bitcoin, you've got 30 plus exchanges. So this chart is tracking 17 different markets. So it's 17 different exchanges being combined. And at the top, I can see the liquidations total for all 17 exchanges. I can see the volume and the volume delta. The blue line is the cumulative futures and perps cumulative volume delta, and the green is the spot. And then I've got the main spot and futures exchanges. So, like, you can see Bitfinex today has been just selling constantly, and Binance is mostly on the up trajectory. Bitcoin's not going to go up until these start turning up. And FTX has been just, their data has really not been the most accurate because they're just being screwy with it. But essentially, this becomes kind of important to see, because futures can do what they want to do, but at the end of the day, if price is going up and spot isn't buying, then it's going to come back down. Some of the just basic charts are just, again, like, all this is doing is showing me where buyers and sellers interacted the most at any given price point. And so Bitcoin right now, you can see is going down, and you can start to see that Bybit pulled some of the bids, but buyers haven't just disappeared. See, like, they just came back in. You can start to see, like, a little stream of buys. Like, this level is going to be defended. If BTC loses this level, then we really want to be short. But you also don't want to just keep longing when it's pretty clear that they don't have the strength. So at some point, they've rejected here 1, 2, 3, 4 times. It's more likely than not going to go down, because you're not going to test the same level, 10 times in a 2-hour period. So Bitcoin should really just go down. And you can kind of see SPY and ES are starting to curl over. The issue is that SPY still has a lot of support up here. So, SPY can go down a good bit and still bounce. So it's kind of hard to justify shorting here. It's better to just wait until you lose that level, wait for that retest, and then you can do, like, a sizable short. But that's kind of the basic overview. I don't know if anybody has any questions. I know we had talked about, somebody had asked about why I chart futures. I pretty much chart the E-mini, oil, the dollar every single morning. I think that futures are a much, much better indication of where we're going than crypto and Bitcoin. I think Bitcoin is much more easily manipulated, and at the end of the day, if the E-mini futures are showing bullish or bearish signals on a higher time frame, then I'm much more likely to be bullish or bearish on that day. And so to me, those are the best traders. Those are the people that are more likely to have, real legitimate knowledge. Those are the you know the folks that really are in the know. And so if the E-mini futures are bullish, then I'm going to be much more hesitant to short. And we kind of looked at that. I posted some charts. It broke through that resistance that I was looking at before. So at this point, it just looks like the ES and SPY are going to be going up. I mean, I don't necessarily think that it's just going to like skyrocket, but until ES breaks below this level, and really more so like 40, 50, then I think we can say this is bullish, because I mean, it pretty much this is about as clean a bottom as you're gonna get. And even though I think it's fake, it could go on for I don't know how long. So this is what to me, when I'm looking at it in the morning and I'm saying, okay, well, it's at resistance. If it breaks through, we're gonna keep going up. That's why I chart it, because that's a much better indication of the macro trend than anything in crypto. Let's see. Does anybody have any questions? I don't know if all of that was clear. I'm gonna assume that means nobody had questions and you all understood it. But yeah, no, for now, the ES is clearly on an up trajectory. It's still making higher lows. Until that breaks down, I think we're kind of stuck. And I think Bitcoin's going to stay in range until it breaks down. I just don't know when it's going to break down. It really wouldn't surprise me at all if we nuke this afternoon. But for me, like, you've got this support right here at 40.50 on the ES. If we drop below that, and you'll see it, like you'll see that that happen. So, where are we? Oh, I gotta get rid of that. You'll see this level will either hold or it won't. And if it doesn't hold, and you get one of those drop below and retest and reject, then I think we can fairly confidently just short everything. But until this support gets lost, I think we're just kind of guessing and waiting. But once the afternoon volume comes in, I think it'll be pretty clear if we're heading back down to retest this general volume area, because there's not a whole lot of volume right here, right? So the likelihood is if we lose this level here, that we come back through this low volume area until buyers step in back in this area. So this is an easy short if we start to break down, because nobody's going to step in more likely than not at 40.80. They're going to wait until 40.70 and 40.50, or at least they should. So that's kind of what I do and how I approach it. I'm really just looking for levels that people are going to want to buy and sell, and then waiting for them to do it at an inopportune time, and then take advantage of them getting the shaft. Because I'm not going to pretend like I know where all this stuff is actually going. I just know when somebody's done something stupid. But this looks like it's going to break down. and at least retest this area, to me. But we'll see. All right. Well, if anybody has any questions, I don't really know how to post this, but I'll figure it out. It's recording, so once I get it up, if anybody has any questions, just let me know.